Hey traders, Raghee here, and in this free video we're going to take a deep dive into the S&P futures and talk about some of the zones that we're entering and the specificity that you really want to have to look for overbought zones, and I'll even talk about some of the indicators that I like to use. So first of all, one of the things that most of you that are comfortable or familiar with the propulsion dots, these dots right here, will know is that we have 3 times seen the propulsion dots turn on before the market gets exhausted up in this area. So does that mean the propulsion dots aren't working? No, it simply means that we're going to focus on pullback buys and then look for the market to exhaust in a very predictable area because we've exhausted here before. We'll talk about different ways to confirm exhaustion in just a moment. So once again, we look for opportunities to take advantage of pullback buys. Now, one of the reasons that the distance from this high to this low is difficult to trade is it's very wide. It's wide enough where as the market traverses one end, of this range to the next, to the other, we have enough points where indicators, moving averages, and even the grab candles can just start to look like a trend. I mean, they're very, very fresh. Now, some folks might say, well, Rag, that's kind of hard. How do I know not to buy those levels? Well, first of all, they're fresh trends. So that is the first thing that should get your attention, and you should be cautious. The second thing is, on the other side of these highs aren't just any kind of high. They're all-time highs. This isn't just the market moving to a brand new set of resistance levels that we saw, say, in February or last April. These are brand new all-time highs in the equities markets. So that should also get you to pause for a moment and recognize the overall distribution market. In fact, if you look at this indicator that we make available free to members, this is what's known as the JT trend, on the TradeStation platforms. This is brand new for TradeStation. You'll notice that the wave is yellow, and yellow denotes a sideways, non-trending market. Something to keep in mind. So in a non-trending market, this would be overbought, and this would be oversold. Now let's talk about the indicators for a moment. If I want to go ahead and activate something that I like to use, and that's something we call the end of day V-score. Let me just enable that here. End of day V-score. This is a standard deviation measurement. The closer we get to a +2 standard deviation, the more comfortable I am that we're at a fairly significant range extreme. Now, in the meanwhile, we could look at levels like, in this case, about a +1.6, +1.7 standard deviation for exhaustion, but you really don't want to be looking for exhaustion any sooner than that 0.16. And again, remember, it's going to extend clear up to almost a 2.0. So the V-score will tell you whatever price range we're in, we are moving a little too far beyond in terms of a standard deviation measurement. Okay, so you might say, well, Rod, that's interesting, but I'm not quite certain that's something that resonates with me. No problem. Let's use something really old school. Let's go to a stochastic, a slow stochastic. And this is as old school as it gets, all right? And this is a great tool too. Before I was calculating V-scores, standard deviations between price and the volume weighted average price, I was using a slow stochastic. What's the setting that I like to use? It's a 21K 3D, so I slow it way down. So let's once again look at the thresholds here. Anything above 80 in this area would be quote unquote overbought. So you'll notice here we are breaking the 80 threshold, and here we are at the top of the range on the S&P. So you want to be very, very specific as to when either you would short S&P, buy puts on the S&P futures, or buy puts on the SPY. Very specific. In fact, within all this chop, and let's use the cutoff of September. Since September 1, 1, 2, 3, 4, 5, 6, 7, 8, maybe 9, 10, 11. 11 days, 11 specific opportunities where we pierced that zone. Not down in here, not on down days, but specifically as we move up into that zone. And then we would even furthermore use either the V-score between 1.6 and 2.0, or in this case, a slow stochastic above 80 to further filter out those particular moves that would not meet the criteria of being overbought. This is distribution fade trading, gang, and I hope this video has been very helpful. Check it out in any market. Check out these kinds of setups in any range-bound markets. All right, gang, I appreciate your time, and I'll see you in the next update.